Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. Can you guys hear me okay? Test, 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 testing 1, 2. Can you guys hear me all right? All right, very good. Okay, just want to make sure you guys could hear me okay. All right, thanks. Very active day in the markets. Matter of fact, the ForexAnalytix team, we usually have a team meeting on Mondays, but today we had to call it off because of the volatility that we're seeing in the markets. And I want to cover some specific things. Let's first and foremost, let's talk about the S&P. So the S&P broke out, as you guys can see, broken into new highs. Now, what I think everybody needs to be looking at is if we dip back below 3,600, you can see where we just stopped. It shows you how important it is. We went to 35, was that 35.95? So really, a move back below 35.87, well, I guess 35.90. That's going to tell us that there's a false breakout. I wouldn't necessarily be watching just the S&P though. What I'd be really watching is watching the NASDAQ, because the NASDAQ is the leader. And as most of you guys know, the NASDAQ's underperforming today. Why is it underperforming? Because we have a possible vaccine that from Pfizer, and it looks pretty promising. And as soon as the vaccine is released, well, I mean, the markets are going to get ahead of it, but you got to think that all these tech stocks, whether it's Amazon, whether it's Netflix, those types of FANG stocks, if you will, some of the cloud computing. I wouldn't really worry so much about the cloud computing because, I think a lot of people are going to be working from home permanently. But anyway, there's the NASDAQ stocks are the ones that you got to really watch here. And given the fact that we didn't hit new highs in the NASDAQ, that's why I think you got to really pay attention to them, because if the NASDAQ really starts to break down, so let's say below 11,900 right here, I'll put in a little alert here. If we break below some of the support today, then you're going to probably see the equity markets, the rest of the equity markets, the S&P start to follow along, and then the Dow. I mean, right now the Russell's up 5.5%, the Dow's up 4.7%, and everything looks great. But again, the risks are mounting that we might get a reversal. So what if you think about what could turn stocks, like from a fundamental standpoint, buy the rumor, sell the news. Looks like we have we might have a U.S. president. Looks increasingly likely, day by day that, the president's going to be President Biden instead of President Trump. So that clarity and that, just knowing, is good, but we might get the buy the rumor, sell the news. With a vaccine, we're probably going to have less stimulus. The lawmakers are going to be less likely to push a stimulus through. We might get a smaller, stimulus, but it's just going to be less. And then on top of that, the Fed probably will not be so easy with doing more quantitative easing or keeping rates lower for longer, however you want to look at it, because it's not like it's not like the economy is starting off on a bad foot. If you look at like PMI numbers, a lot of our production data, it's still good. It's good, and so the Fed's just not going to have to be as accommodative, nor are other central banks as well. So that lack of backstop from some of these central banks, it could lead to some equity market selling. That's why I think you can't get too comfortable today, because if we start to see a reversal in these asset classes, I think like the dollar put in a key reversal today. Look at the dollar index. That is a bullish engulfing, or close to. You look at the look at the euro. The euro is 20 pips away from a bullish engulfing. Well, you know, we traded the exact same lows from Friday, so if we have to break through 117.95. I mean, you know, with the dollar looking like it could reverse almost across the board, and with precious metals, which really led this move. If you look at gold, really big move in gold. I mean, we were rallying towards resistance, and then all of a sudden hit the 50% retracement, boom, and now here we are. We break, look at this 38% retracement. You guys see this fib right here? Fib low, there's a low, there's the high, right? 38% retracement. Forget this breakout point. Let's look right here. That's basically 1835. You know, we break below that 1835. Oh, man, gold's going to get hammered. I mean, you may be looking at it going, man, it's bearish right now. Yeah, it could be way more bearish. I mean, especially if you look at the weekly chart. I mean, we could be putting in a long-term top here in gold. You know, gold might trade back down towards 1600 over the next couple of weeks. What's that going to do to the dollar? All right, so these are all things that I'm paying attention to going into going into today. Now, I'm a little irritated because I shorted the New Zealand yen right here at this multi-year trend line. I got stopped out really fast. I mean, that was like the quickest stop out. I sold it right here or here, somewhere around here, and stopped out right here. It's like, damn. But, you know, I mean, it was decent risk reward. But the thing is, I don't know how to trade these yen pairs right now. I don't. The dollar yen is higher. I think it's higher because yields are higher. And by the way, one of the other observations that we noticed was that when yields started rallying hard, so when bond yields started rallying hard, the stock market did not like that. So when you saw like the 10-year yield break out here, the stock market just started trading really heavy right after that. So just, you know, watch yields. I don't know if, you know, this sell-off in the bond market is really going to, you know, usher in some selling of risk assets, if that makes any sense. Okay. So yeah. And Jane said, yeah, all the stay-at-home stocks. Yeah, those are going to be the ones that you gotta, you know, think about. I mean, it's all the vaccine news is really positive. It makes me feel good that, you know, knowing that, you know, maybe by mid next year, mid 2021 summer, you know, things are going to be back to somewhat normal again. I hope, right? But the markets are going to start pricing that in, and you know, that's where, you know, we as traders, you know, we look 6 months out and we start going, okay, well, what's happening 6 months out, and you know, how do we prepare for that? And that's one of those things. You know, just be careful with equities, okay, especially the Nasdaq. So as a result, just so you guys know, I'm playing the dollar Mexican peso on the long side, like right here, basically. Let me show you why. Breakout point. You can see it right here, right? Breakout point. 78% retracement, low to high, 78% retracement, 161% extension of this move. So I'm long. I really want to add to being long, but I'm really looking for a move back above 2050, 2060, like right around here. You can see all these. I have like alarms set up because I really want to be notified as we start to rally, if we start to rally. And then if we get above like this 2060, even though I'm got a target of 2085, I'll be moving that. Okay. I just left that up, and just in case, like overnight, you know, it's not moving, and then, you know, it just takes me out overnight, that type of thing. But yep, I am looking at that, especially if we see some continued selling in equities. I think that's where it's going to show up, and it's going to show up in the dollar max. All right, guys and gals. Hey, I want to thank you for all of your support. For those of you that are listening in live, thanks for being part of the ForexAnalytix community. If you guys are not, that means you haven't taken a trial yet. It's only $1 for 10 days, so try it out. Make sure you guys download the mobile app too while you're at it. And I'll see you guys in the chat rooms or on the Face webinar tomorrow morning. Thanks, everybody. Have a great one.